weekly analysis on EMini futures. We'll start with S&P futures. Today is March 25th. We are looking into the week of March 27th. I'm not going to recap on last week. Please follow my last week's video. Pretty much the last week played as planned, and FOMC did jump, but it bounced off right on the levels that I had presented. So yeah, please follow my last week's video to learn more about the play out for last week. Today I want to start with SPX, and we have the max range available here. And if you start looking here, right here, that is like March, somewhere in the 1928. So if someone had actually bought some stocks here at let's say 1865, and they say, hey, stock market usually returns you profit, look when they actually had the breakout here. So they brought here, they did not sell anything at 31. They must have doubled their money in a year. They are like, hey, I'm not gonna double my money, I'll just leave it as it is. And the market crashed big time, and there is nothing that they could do until 1950. They would be, actually, to precise, yes, till 1950 there was no breakout. They would have be able to get out at 1946 or even at 1937 on a break-even loss, so no loss kind of thing. But that's 25 years of wait. Something similar here. Somebody who would have invested right in 2000 would have to wait all the time, all the way to 2007, to either get out of their position without any loss, or wait all the way till 2013 and then gain benefits of 13 years. Same thing now. Let's start. I'll put a price here right at the top here. So that was in 2021. We are almost in 2023. Someone who had invested in 2021, that's right around January 2021, thinking S&P will go to 5,000. Now they are in loss, they are waiting. My whole point is that in such kind of scenario, it is good to get out of the market, but how do you know how to get out of the market? And that's where the moving averages really help. You can really look at those and figure out if it actually is breaking a trend line and we get out of the market, and also look at the supply and resistance levels. And that's where I want to focus a little bit today. So we will go into the 10-year daily, and I'm not going to focus anymore on SPX. I'm going to move over to the futures and looking at the 10-year daily. And if we look at, so the thinner line is the 200-day moving average. The little bit more thicker line is the 100-day, and the one tracking very closely to the trend is the 50-day. So usually whenever you cross over these, you know that, hey, if you bought here and it is touching your 50-day, and this is on regular trading hours, I don't have extended up. So if you're looking something here in this market, let's say you bought here thinking it'll go, and it starts coming and touching your 50-day, and that's a level there. That's exactly a level there. And if it starts touching your 50-day and your level, it will be a loss for sure. If you want to get out here, it will be a loss for sure. But look at what your loss would be. You started at 33.85, let's say, and you got out at 32.91. So 33.85, 291, 300, so 85 points or something like that. If my math is correct. Yes, that's correct. So let's say 100 points or so. And if you did not do anything and these started converging, so 50 days starts dropping down, 200 days starts going over the 100-day, now you're at a much bigger loss and you have to wait a long time. So it's important to keep an eye on that, and that's where I want to start today. We know, let's bring in our extended hours, and draw some channels. This is the bigger trend channel that we have talked about a lot of time. So that's the bearish channel. We broke out, we again tested, we broke up, and we have broken the channel inside, and we are consolidating here. So I know this graph is looking very dense, but if you look here, this is the 200-day, the thinner one. This is the next thicker one is the 100-day. This is the 50-day. They've been trying to break those out, but now they are in a critical phase here. The 200-day is trying to move down, so that downtrend is trying to flatten out here. That bearish channel is still holding, if you see, and we have this 100-day moving up and 50-day moving up. So keeping this level here, right at this level. So let me actually move this price line here. $39.11, so let's say 3900. This level here looks to me to be a very good level now, and I know the market or the economic conditions are being considered weak and a lot of job losses in the tech sector, but from this chart I think that we are now consolidating and we will be moving up. That's what I'm forecasting. I don't usually like to forecast, I go by the whole price action. So looking at the chart, that's what I'm seeing now, and hence I am a little bit now wary on holding two shorts. As of now, I don't have any shorts going to next week. And looking at this trend line here, so let's draw that trend line and we'll try to get as many, and something like that. I want to get these bottoms and breakout, did not hold, breakout, did not hold. So but came down, touched here, bounced back and going to here. So this is another level there, and we'll talk about this shorter trend here. So sold off, went up, so that's your classic bearish flag, and then it's selling off and it's on the bottom of that channel and it's consolidating. What I'm thinking, that is consolidating for a pop-up, because that bigger bear channel is still broken and this smaller bull channel, it's going to the bottom of that bull channel. It tried to break bottom of that bull channel, and that's where it's actually right bounce from your 200-day moving average. 50 is up there, 100 is, so they are stacking in the right order as of now. Now let's clear these channels. And draw some more levels here. And I'm also going to clear these moving averages. And easily to do that is here. Okay, so a little bit more clear, and we're still on the daily. So if you look at that channel there, right there, so, and if I draw a trend line here, market sold off and formed a bull channel, but overall it's still going sideways. So it may come down here and test this level again here, but I am thinking this is going to break out of this level between these two levels here. So hence I want to see here, based on price action, if it actually breaks this level, and that would be, let's say, to be more precise, somewhere here. So if it breaks this 39.22 area to the bottom and retests, I will change my mindset, reset my bias and say, okay, the bull trend is broken and we're gonna retest these areas down here, which is, that's a cluster there, so that's around 38.54, and we will confirm that with a shorter TPO chart, and that's the other level, 37.89. And going into next week, I think it's prudent for me to search for a bullish move, and I'm gonna only short if it tests this area on the top, because it sold off, retested, sold off, retested, sold off. I take that back. I'm not gonna short as of now. For me, the short would be somewhere here all the way top, if it ever goes to that area at all, and or else I'm gonna short if it breaks a support, which is here in this case the 39.22 area. To be more precise, this was the last week support, the 38.96, but I am willing to take a chance here and start looking at the 39.22 area. If it breaks, retest from the bottom, I'm going to take a short there. And then obviously these are my immediate levels here. I'll put another level here. So that is 38.92, too close, and hence I'm going to remove it. And I'm gonna keep at the 38.54. If that breaks, again add to my short, and then I'd start looking at these areas down here. That's what I'm planning now. But as you know, from the moving averages and looking at how they are stacking up, I'm thinking this trend is gonna go up, and the market is starting to go up. It forms a cluster, goes up, forms a cluster, sells down. So it is formed a cluster here, right here. So it's all green. If you see, the trend is going up, it's making higher lows, and so far not has made any higher highs. In this it is high, but this particular day, that was 322, it did not, these two bars could not go and completely change that. So we'll wait to see, because that was the FOMC day, big sell-off. It's trying to capture and trend, see if there are any orders still left there. So I will try along to at least take it to that level and wait, get out, and let the market decide what they want to do. They may chop a little bit at this point of time in sideways and then decide. So I'm going to avoid that chop for my swing, to get into again a position. So in short, I am more bullish now. We'll look for a bullish trend kind of position, so take going up, and you may put another level here, and let's confirm that in a hourly. And if we zoom out, that's 180 days 6 hourly. So if you look at that, yeah, that level is a good one, and 39.94 for sure, and we'll add another one right here. So if it breaks that, then we are obviously, that's a rejection level there. And we are going to try that. So if it breaks that 40.15, it is at 40.10, retest, give it some cooling points, let it go to 40.20 or so, retest 40.20, 40.15 area, you get in, and you are taking your profit out at 40.50 area. If it holds sideways and retest that from the top, we will again try to take another one. Yeah, we'll not get the or at least I never get the bottom or the top. I always go with the trend. So that's what I'm looking for going into next week. As always, keep your stop losses tight, your losses small, and your profit at large. Thank you for listening, and I know this was a little bit longer video, so Really appreciate. Thank you for listening. Bye.